Hey everybody, welcome back to the channel. Sofi, as predicted, reported its GAAP profitability on January 29th, right before the market opened. And we all saw what happened. The stock ran up over 20% on the day off. However, it ended the week with 12% down. So a lot of you may have questions on what exactly happened, and I really hope that you watched my last video. If you had not, I'll put the link right here. Go definitely watch that. We talked about two specific trades that you could have taken to profit from this news. This was most likely the case of buy the rumor, sell the news situation. In today's video, we will do a quick recap on the earnings because you probably are already aware of what the earnings were, but there were two key important points that I took away from the earnings call, which I have not seen a lot of people talk about. So I will share that with you as well. Also, what levels should be actually watching to get into the trade again for Sofi. And number three, I'll share the trade idea that I will be actually getting into Sofi in the coming weeks or so. So if you end up enjoying today's video, make sure to give us a like, and without further ado, let's dive in. All right, let's do a quick recap on the earnings. So if you were watching the earnings or if you were on the call, we reached the GAAP profitability. The earnings were reported on 129. We beat the EPS by 1 cent. So it came out about 0.04. We beat the EPS GAAP actual by 2 cents. So it was 0.02. They were expecting a 0.00. So that was amazing. We also beat the revenue. The revenue surprise was about 22.74 million. This was an amazing earnings call, no matter how you take a look at it. Since they have started reporting earnings, they have never missed a revenue, and now the beats are happening on a very regular basis. They did have a couple of EPS misses in the beginning and the last quarter in Q3. This is what you want to look at when you are investing in a growth company. The growth should be in double digits, and as we can see, it is almost in higher double digits. The company started off with about 1 million subscribers, and today we are sitting at 7.5 million. Phenomenal growth. We saw a similar trend going up on the product side. We are seeing a similar trend in the Galileo accounts. We are seeing a similar trend in their lending as well as the financial services products. This just goes to show how the management is executing on the vision perfectly. If you follow me on X, after the earnings call, I did a quick recap and did my commentary on the earnings call. So these are a couple metrics that were added. Of course, GAAP profitability reaching was the highlight of the earnings call. For the future guidance, the entire EPS for 2024, they're looking at about 7 cents to 8 cents versus the expectation is about 5 cents. So this is what we are going to be watching. And the member growth is projected to be about 30%. So we are sitting at about 44% growth. We do see some deceleration in the growth. We may only get 30% growth for next year on members. However, there were two important things that happened on the call. Number one, the CEO reiterated that 2024 will be a transitional year. What he meant was that investments in technologies will start to show promise as the business starts to scale. This is where we will see the benefits of all the investment that Sofi had been doing from the previous couple years. The second one is, and that is very important, if you are following the market in general, you know that the market is expecting anywhere between 6 or 5 rate cuts for the year. Sofi, on the other hand, is playing very conservatively. They are expecting only 4 rate cuts for the year. So this was a question that was asked by one of the analysts on why Sofi is being so conservative, and the CEO said we are being conservative here because when you start seeing a lot more rate cuts, which means the economy is not doing well, and that will eventually impact all the companies in the sector as well. I believe that it's a very prudent strategy to remain conservative in this volatile environment because anything could happen. We have a geopolitical situation happening. We have elections happening across 40 countries. This is one of the most monumental years for the stock market and for the world as well. Short interest on the company has gone to 13%, which is not super high, but it's not low either. So keep that in mind that we could see more shorting happening in the coming weeks and months. And that you can see in the put to call ratio when the week ended on 2/2, 362 call options, and we had 178K put option. Put to call ratio was 0.49. Now, generally for retail stocks, put to call ratios are always in favor of call options because retail investors love to open calls. We also see the implied volatility goes up from 30% to 60% for the coming weeks. The put to call ratio goes up slightly, 0.53 for next week, and then it jumps to 1.25 from put to call, where you see 217,000 put options expiring on 2/16 versus 173 call options. ratings. We are seeing that there are more hold ratings on SoFi as opposed to buy. We only have 5 buy ratings versus 11 hold and 4 sell ratings. So with the current stock price of being at 788, you're looking at about a 20% upside with the average price. And of course, the high is $15 and low is $3. In my last video, we talked about 2 trade ideas. First one was the cash secured put. At the time, I took the screenshot. I was up about 89%. I closed the trade at 91%. I opened a $8 put. It was expiring on February 24th. We opened 10 contracts. So each contract was 56 cents worth. But when we sold the contract, it was about 2 cents or 3 cents worth. The second was a YOLO trade. We bought one contract for 34 cents and I sold one contract at 67 and I sold the other contract at 85. Over 100% profit we made on each of this trade. So this is how I placed my trade ahead of the earnings to take advantage of the buy the rumor and sell the news. We talked about this in the last video as well. We saw 6 weeks of run and then we saw a lot of profit taking. For the week of the earnings, we saw the stock really going up pretty strong all the way to $9.45, but ended up coming down and ended up the week at 788. On the weekly, what we are noticing that in the last 3 weeks, the stock has bounced off its 50-day moving average, which is a good sign. The 50-day moving average is about 753 for the stock. When we switch to the daily, we see a different pattern. When we closed the week on Friday before the earnings, starting at 762. After the reported earnings, the stock shot up all the way going to 945 and we saw this massive gap up. So 20+% on the day on Monday after the earnings report, and then we saw a continued selling and then we had this gap up. Generally, when you have a gap up, most of the times you could expect the stock to come down or go up to fill those gaps. This is generally the trend. It doesn't mean that every single gap up or gap down will be filled. And this is exactly what the stock did. Stock pretty much went down all the way and currently it's trading at 788. Now here are a couple things that are happening. If you're looking at the moving average strategy, is you should always have 20, 50 and 200 in an uptrend and similar in a downtrend. But what is happening right now is the 20-day has a crossover to the 50-day moving average, and it is coming very close to the 200-day moving average, which is right over here, as you can see. So 20-day moving average is 731 and 200-day moving average is 740. So when we don't have an alignment on the 20, 50 and 200-day SMA, this means that the price is in consolidation phase or is experiencing a pullback. So this is a time that you should not be getting into trades without getting confirmation on the trend. Point number 2, we are looking at the next support level in case the stock keeps in a downtrend. We are looking at about 686. Of course, we can draw a Fibonacci retracement. It will give us a couple levels, but just from a resistance and support standpoint, 686 is what I am looking at as a good support line, since we had a couple touch points, 1, 2, 3, 4, 5, 6, 7, 8. So a lot of touch points. So we have about 13% downside if the stock goes to that support level. So there is still a lot of room for the stock to move around. Now, what is interesting with the volume profile, we saw a lot of buying coming in at this level, which was about the 958. We don't see any volume happening in between this, which is about the 9 all the way going down to 850 to $9. But then we start seeing some more volume shelf building around this area, which is around the 785 going all the way to about 822. So if the stock continues in a downward trend, where is the next volume shelf? The next volume shelf is around this area, which is the 705 all the way going to about 722. So this is what I have marked here. So this is going to be my buy zone of about 702 all the way going to 727. That gives me an additional protection on the stock in case we see a continued downtrend. So looking at some options trades, take a look at 16th February, because on our put to call ratio, we saw a lot more puts opening at that level. Now, if you are looking at opening a put at these levels, a $7 would be ideal. For 2 weeks out, you'll get about 7 cents, whereas the implied volatility is 64%. So pretty elevated at these levels. We have about 77,000 open interest and the delta is about 16, which is a pretty low delta. We don't expect the stock to go down. So it's a very conservative trade that you will take. When you're not sure of the trend, it's always good to be a little bit more conservative so that you protect yourself to the best of your ability. At the time of this recording, the stock market is closed. So these numbers will change by the time you see this video. I'm not looking at 16th February. I want to give myself a little bit more runtime. So let's look at 8th March and 15th March. So for a $7, you'll get about 20 cents, almost 4 times what you would have gotten in 2 weeks, which completely makes sense. Your implied volatility is about 60%. Your delta goes up to 23 from 16, and your open interest is only 440. So there isn't much open interest at that level either. Now, if we go to March 15, which is 40 days of runtime, at $7, you'll get about 24 cents. The implied volatility is 61%. So it continues to maintain that 60% volatility. We do have a lot more open interest of 23,000, and we have a delta of 24. The best time to open cash secured puts is when the stock is down for the day, because your premiums are going to be up. There will be a lot more implied volatility and more open interest will be on that particular day. So I will be targeting $7 put expiration March 15 for 24 or 25 cents, and my return on investment in the next 40 days will be about 3.42% on that trade. And if those contracts get assigned, my cost basis will be 676. And I'm protecting myself to have a 14% downside protection in case the stock continues in a downtrend. There you go. That was a quick recap on the earnings, my trade results, the technical analysis of SoFi, and what trade I am going to take for the next month or so for SoFi. So if you ended up enjoying today's video, make sure you give us a like, click on subscribe, and ring the bell notification. I will see you next time, investor family, but don't forget to invest for tomorrow.